Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
I have boring socks on. Boring socks on for today.
All right. Hey. Welcome back to the Invested Dads Podcast, the podcast where we take you on a journey to better your financial future. Today, we're going to be talking about chips.
My favorite topics. So I'm going to start by Doritos.
And Fritos.
That's right.
And Lay's. Wavy. No, we're actually not talking about that kind of chips, but more like technology components in general. And there's a handful of different categories we're going to talk about. Graphics cards, memory cards, semiconductors.
Semiconductors. So if trucks were in an orchestra, that'd be the person that led them.
I mean, yeah.
Yeah, semiconductors.
Yes. So I think we need a little bit of help kind of narrowing our focus on what this really is. So I tend to think of chips in three broad categories. These are, number one, processors.
Okay.
So like CPU, central processing unit. So according to a great blog, which I'll link in the show notes, it was actually written by NVIDIA, the company. The central processing unit can be thought of, right, as the brains of a device. So I think of like Intel's i-series processors and things like that.
Yep.
Like the brains of a computer.
And that's not like the memory where it stores everything, but it's how fast and what it can do for working programs or running things.
Oomph.
Yes.
But also related to oomph and like ultra high performance oomph is graphics cards. So GPU, graphics processing unit, and from the same post written by NVIDIA, which ironically NVIDIA makes amazing graphics cards, they describe the graphics processing unit as the soul of a device. So recently, in like the last 10 years or so, high-performance graphics cards have become mainstream in many more devices than just computers, as we all have more devices. We're wearing them, we have them in our pocket, we're wearing them on our wrist, these kind of things. This is a huge component of super high-performance speed requirements that you need for things like gaming and cryptocurrency mining. If you want to know more about cryptocurrency mining, we did do an episode about that, and we'll link that in the show notes as well.
When you think about these new games that they're playing on PCs, you always hear about people like customizing their PC where they're changing things out. So these are the components that they're changing out.
Yeah, it's exactly
the
what they're
CPU
doing.
and the GPU.
Yep, those are the most common upgrades that people can make. And, obviously they want a lot of what's called RAM, which is random access memory. And the more RAM you have, the faster your computer can like retrieve things and calculate things and do things quickly. So that's like a very big requirement for gaming, but also in tandem with that is going to be the graphics. So nowadays, PC gaming has really taken off in the last handful of years. Like when I was in college, when I was in high school, and even today, I still have a console.
Yes.
I have an Xbox One. Like I feel like it's awesome and super fast, but the hardcore gamers in the world nowadays, they're all on PCs.
Yep.
And it's because you can upgrade these PCs and get insane graphics, like ultra high speed and like frames per second is just off the charts now. So
like if you're playing a game where speed matters or reaction
accuracy
and reaction time matters, you'd want a nice graphics card so it can render the graphics in a more clear and crisp way.
So like imagine you're playing
Fortnite.
I've never played Fortnite.
Yeah.
That is a sign of how out of touch I am. But imagine you're playing Fortnite and Josh has a super high performance NVIDIA chip graphics card in his computer, and he's able to do things faster, kill things faster, shoot faster, aim quicker, all of these different things, move around faster because he can react faster. And I'm playing against Josh, and I'm on my old Sony Vaio laptop from college, which had nothing fancy, and it would hardly work with YouTube.
Yes.
So who's going to win?
Yeah, there's advantage, disadvantage.
There's a big advantage there. So that is graphics cards. Next is cellular chips. So if you think of like what your cell phone runs on specifically, or if you have like a cellular watch or an iPad that's cellular, typically there's going to be a chip in there that allows your phone or your device to access cellular data. And what that does is, between 3G, 4G, 5G, specifically, things like Qualcomm, they developed this technology. Their chips allow you to access not even nowadays. So you're going to have a 4G phone, probably maybe not a 5G phone. That's kind of coming.
It's coming.
But like a 4G phone, you can access 3G, and that chip in your phone allows you to access the spectrum of the service, which is pretty cool. So Qualcomm is like,
and it's global too. I mean, like,
exactly.
Those phones you can buy internationally, you can go anywhere, and it picks up and is able to move different.
And
data.
what's interesting is that like some of these developing markets, they're skipping some of these earlier. It's like the U.S. started at the beginning. Europe, most of Western Europe, it's like G just had G.
It was just G.
I don't even know, but I can remember.
It was lowercase G.
I remember when 3G came out.
Yeah,
and that was a big deal. And now 4G was out, and I think 4G is very fast. I don't know why you would want more, but 5G is coming. Like some 5G is available in some big cities and stuff like that. And it's coming. It's just the G stands for next generation of wireless signal speed and strength and integrity and all of this stuff, but the infrastructure required to build it out is substantial. So cellular chips is another one. Then we move on to like an umbrella term, semiconductors. So what Josh was talking about, the guy who's conducting the semi-trucks. No, actually, like semiconductors, very broad, but it's pretty much a little chip that has two little legs and a bunch of silicone, a goob, like a glob.
Yep.
And various densities and types of silicone and amounts cause different delays or processes when the signal goes through it from one to the other end of it. And these things, millions and millions are made of them every day, and they're in every single device you touch.
It's crazy. I mean, when I think about that, like you see the size of these chips, these semiconductors.
Yeah, they're so small.
They're minute, and it's just that's where the data flows through. That's what all this is, powered through.
Yeah,
it's incredible. And silicone, like this little gooey liquid stuff you put on, and then it kind of semi-hardens, and then electricity flows through it, and it does something. It's crazy.
I was reading that there's some really big names in semiconductors. Those are kind of the names you think of, like NXP Semiconductors or whatever. There's some big companies out there, but not many people can like join on board as companies because they make so many of these teeny little things that the margins are like nothing. So yeah, semiconductors in general. So Josh, what are some applications that some of these products can be found in?
I think when we go back and think about some of the stuff we talked about in the past, when we've talked about software within technology, companies who are doing software and technology, a lot of times there's a hardware component for how these software firms, a platform that they need to be on. So take, Facebook, for example, we've talked about them. You can't access Facebook unless you have a phone or a computer somewhere to access the internet to get there. So the hardware components are in all those things that you use for technology.
Right.
And so, cell phones, like I mentioned, computers, watches, like you said, all this new smartwatches that needs it. In some of even the newer, for instance, we were shopping for a new refrigerator a little while back. And there's some crazy fridge out there that can access the internet and have a little screen on the front. And those have it in there. Yeah. I mean, appliances now, autonomous vehicles. We had a whole episode on that.
Yep.
Obviously, they'll have it. Anywhere you think of technology that's accessing some sort of data, semiconductors are involved.
Yeah. Yeah, and we talked about it a little bit, but gaming and cryptocurrency mining, those require some very powerful computers that use all of these different components we talked about. But two big areas that I think are up and coming in this is that of artificial intelligence for one, and machine learning. That area specifically is something that has been growing, but is only going to grow going forward.
Right.
And it's how we are going to be, understanding data. It's how we're going to be managing, we live in a big data world. So artificial intelligence and these computers that can essentially think, they're programmed to think and learn. They take tons of power and tons of high performance chips and GPUs and CPUs to do all of this. It takes massive amounts of power to do that. And the fact that artificial intelligence is a growing field, that is a huge area going forward, as well as data centers. So if you're on Facebook, where do you think all that data is stored?
Yeah, and Zuckerberg
It's not Zuckerberg's closet. It may be when he was, in college. It was, but all of the data from everything that we use is collected and stored and managed and manipulated in supercomputers in these big data centers where it's just rooms of computers.
Climate-controlled rooms to keep them cool, because that's a lot of, like you said, there's a lot of power, and with that comes heat, and so you have to really monitor that.
So, crazy. That is another up-and-coming kind of area of growth in this specific area. So, one thing I'm going to talk about that I don't think is going to make sense right away, but it's going to make sense when we're done.
Okay, I'm ready.
Dow theory. You're familiar, Josh, right?
The Dow theory.
The theory of Dow.
Walk me through it. The theory of Dow.
Okay, so anyway, the Dow theory is really that for decades, and even to some extent today, many investors believed that the Dow Transports Index has been a leading indicator for the broader stock market. And this is because, our outlook of a company's earnings drives the stock market up and down. So as forward thinking and estimates change up or down, so does stock markets. Well, as companies purchase items to sell, or consumers buy them, these transportation companies have to get the goods to where they're going to be sold, to the end customer or to another retailer or whatever. So those actual purchases and their business leads the earnings impact that's actually going to occur on Wall Street down the road.
So you think of shipping. So if you see a lot of shipping happening, a lot of trucks out on the road moving stuff, then our economy must be humming and things must be going pretty well. So that's the theory is, if you see those trucks out there and you see the companies that run the trucks doing well, it's telling you the economy is doing well. So they're out ahead of it.
And so, it's ahead of the stock market as a leading indicator. So
awesome. And then if it slows down, then it's leading into saying, okay, there's something going on,
slowing
prior
down.
To other companies announcing, hey, look, we slowed down on sales.
So similar to that, the cyclicality, the ups and the downs of demand, semiconductors have a very similar path. So demand for technology products, much like that of broader consumer and business purchases, that cyclicality is very real. And often these products are viewed as more of a luxury, and that leads to more drastic demand swings, both up and down, when compared to the broader market. So, with that in mind, let me introduce you to our new theory. We're going to call it Dad Theory.
All right, so like the Dow theory.
But not quite.
But Dad's.
Dad Theory. So it's a different spin, but we believe that semiconductors, so those little tech nuggets that have various functions in nearly everything we touch, are the new leading index. And a good way to track that is with the Philadelphia Semiconductors Index. So, trademark pending on the name Dad Theory, but that's where we're at.
So the thought being, maybe there's not as much stuff being shipped, but that doesn't mean our economy is slowing down, because when you look at technology companies, they're not necessarily shipping anything over roads because it's being delivered digitally.
It's a lot different.
Watching the semiconductors will show you how maybe some online and some more technology-focused revenue within our economy is being generated and the ups and downs of that flow.
Right. So that, along with the fact that, as our lives become increasingly digital, we're purchasing more or less, depending on the cycle and where we're at in the market, of devices that use these chips. Mm-hmm. And that ultimately will lead the broader market. So specifically, as we're recording this in early June 2020, the Philadelphia Semiconductors Index today hit its all-time highs again coming out of the COVID-19 bear market. Wow, that was crazy. So
if we're already back up,
so it's already back right above where it was in March.
Oh wow!
So what that means, right now, so for reference, the S&P is still like 7% off of its all-time highs.
Early June,
early June 2020. So we feel like this is a pretty bullish call that the broader market is being led by semiconductors. As semiconductors have now regained their all-time highs, the broader stock market, or specifically the S&P 500, probably going to follow suit, before too long, as it kind of continues this rebound rally out of COVID-19. So I do want to tell everyone that this is not really like brand new thinking. We're not breaking new ground here. This is a discussion that people have had for a long time. We put a fun name on it.
That's right.
And but we take no credit for this being, completely original. But it is definitely worth talking about when we're talking about these components.
Yeah, and when we talk about leading indicators, those type of things, they're not perfect, but they help you at least look at trends and direction of the economy and where things are going. So it's always good to have kind of those thoughts. And again, transports worked for a while. They're not maybe quite as consistent as they were in the past. So, take it for what it's worth, but it does seem to help at least show an indicator of direction from those semiconductors.
Exactly.
Another thing to note about semiconductors in general within that industry is they tend to be pretty well-established, mature companies. Like you mentioned, Austin, there's not a lot of new ones showing up in this semiconductor
it's hard to get in.
area. There's just not a lot of spread there for them to make a profit, and you got to try to earn market share in these big companies. They have the bulk of it.
And you've got to have massive scale to compete. And there's only a handful of companies that do.
And they're, from a tech standpoint, not a lot of tech companies pay dividend.
Right.
And if they do, it's pretty low. But they're some of the higher dividend payers in the industry, too, which makes them appealing for certain types of investors as well.
Correct.
So it is an interesting space to look at from that standpoint.
Man, we should probably do an episode on dividend investing.
That would be great.
Oh, wait, we did. Check that out. Link in the show notes below. So, Josh, I have been waiting all week for your dad joke of the week because I said that Josh was going to make it, not me.
Yes. So dad joke of the week. All right. I saw this online, so I can't take credit for it, but it made me laugh. So I thought I'd write it down and bring it in. Okay. Austin, what is worse than when it's raining cats and dogs?
I would say raining just cats because I like dogs.
Nope. Hailing taxis.
I mean, that would be rough.
Yes.
That would be rough.
I mean, that would be painful, but hailing taxis is no fun anyways. But when you look at it from that standpoint.
That's such a play on words.
It is.
That was where it is.
Hailing with your, like.
But also hailing.
Here, but hailing down because it's raining cats and dogs. So there's creative. A lot to think about. So if you need to, rewind and listen to it again, and you'll really get the depth of that joke. So
I think now we should probably talk about how we can invest in this trend. Yes. Because that's what what we like to leave, as a takeaway is some ways to gain exposure to these growing areas of the economy and of the stock market. So
individual stocks?
Yeah, individual
first comes
stocks.
To mind?
The first ones that come to mind, one's
Pepsi.
Pepsi chips.
They own
Frito-Lay.
Frito-Lay, so that's my play into the chip industry.
Yeah, there's Josh's play. So in the technology chips, you could even go, for things like Qualcomm, like we talked about, NXP Semiconductors, Intel, NVIDIA, AMD. These are all companies that are well-established, mature, and still in a very high growth. It's an interesting environment because traditionally you have mature, stable companies who pay a nice dividend, or you have a high growth industry.
Yeah.
But in this kind of segment of technology, this component segment of technology, you have both. Mm-hmm. And I think that's a really, really lucrative place because you can still get growth and income, which are two things investors like.
And again, Austin, these are not recommendations.
Not recommendations.
We're just telling you what's in this sector, what's some of the companies that are playing out in there. We always encourage you to talk to your financial advisor about that. If individual stocks are not your cup of tea, so to speak, ETFs, what are out there for that?
Yeah, so there are some ETFs specifically looking at semiconductors. And, we talked about the Philadelphia Semiconductor Index as the actual index. Well, you can never invest in the actual index.
Okay.
So, because that's managed
it's not tradable.
Yeah, it's not tradable. It's managed by a pretty much a benchmark company. Mm-hmm. And you cannot buy the S&P 500, but you can buy an exchange-traded fund that tracks the S&P 500 and has nearly identical weightings and movements and stuff like that.
They try to mimic the return for whatever
and
you
they
were
are
trying to.
Darn close.
Yes, they do. Minus their expenses, usually they're pretty
quite
close.
Low for a lot of these passive ETFs. Yep. So specifically mimicking the Philadelphia Semiconductor Index is the Philadelphia Semiconductor ETF, which is an iShares product, I believe, and the ticker is SOXX. Another one is the Van Eck Semiconductor ETF, and that ticker is SMH, and that's the one they use on CNBC a lot.
What? Why? Again, I always come back to if you're naming your thing, especially with ETFs, because there's not as many out there.
So many options.
CHIP, CHIP. Is there one out there? I don't know. I'll have to look it up.
SEMI.
I don't know. It's crazy out there. Yes. There's just so many. You're missing out.
So also, I would probably point out that if you are invested in a well-diversified, specifically U.S., but probably global as well, equity mutual fund, you're probably going to already have some exposure to this.
So if they're tracking the S&P 500, like you mentioned,
exactly, you will.
That is a piece of the S&P 500. Correct. You will have some exposure there.
It is so. Technology is a sector in the S&P 500, and then semiconductors is actually a subsector.
Yeah, or an industry.
Exactly.
Yep. Okay.
So those are kind of ways you can invest in the trend. But Josh, should you invest in this trend? Should you invest in this kind of technology, whether that be semiconductors, graphics cards, processors, just general tech components? Should you?
I would say you should. from a personal standpoint, unless you're Amish, you will probably already be invested in the tech sector in that you already own, without realizing it.
I bet Amish people,
some do.
They probably, without even knowing it, something they have has a semiconductor in it.
And so those are the things, though, those are the pieces, semiconductors, graphic cards. You probably own something at your house. You may even have something on you right now that has these things in it.
So what you're saying is that you've already supported the stocks of these companies by your purchase. So you might as well potentially own the actual...
To answer your question from an investment standpoint, again, you need to talk to your advisor about what your goals and objectives are. But in general, when you're looking at some sort of broad exposure, the chances are you will probably have some sort of exposure to this. Right. Because if you look at technology in general, it makes up a large portion of our life. And as a result, our financial world, tech makes up a large piece of that. Right. It's the largest sector within our U.S. economy and in the market. And so semiconductors make up a piece of that. So probably, yes, without knowing where you're at and who knows what your goals are, probably you'll have some exposure there.
Right.
And it makes sense.
So you're not saying go all in.
Yes, I'm not saying go all in.
Especially because of that cyclicality we talked about. Semiconductors generally go up very nicely and go down very quickly. Yep. And those are things that you should not have everything in your portfolio probably go the same way all the time.
Yep. And you think about, Intel, you mentioned their processors. Usually when they come out with a new processor, there's some demand as people are upgrading their equipment, and then it kind of lulls, and then they come out with an upgrade, and it kind of goes, like you said, up and down. So, in general, it could be a big piece, not a big piece, it could be a part of your overall allocation, right. And within your equities, technology in general tends to be a larger piece in anyways. Right. And so, there should be exposure there.
And we just want to remind everyone that, we believe that each investor deserves great care in their investment management, and we want to let you know that we're here for you. So if you don't have a financial advisor, or if you just simply want to hear more about what we do, as Josh and I work at Hicks & Zuercher Capital Management, check out the Invest With Us tab on our website. We'll link that in the show notes below as well. We work with a team of credentialed and experienced colleagues that have worked alongside our clients for nearly 2 decades to help them achieve their financial goals, and we believe we can probably help you too.
And also, check out a free gift while you're on our website, 8 Principles of Timeless Investing. There are 8 themes just talking to you about how to get on track to help meet your long-term goals.
So, Josh, how can listeners help us to grow this podcast and continue to help a lot of people?
Well, first of all, subscribe. That way you'll get the updates when we shoot out a new podcast every Thursday. Leave us a review on Apple Podcasts if that's where you listen. Email us any thoughts, ideas, questions to hello@theinvesteddads.com. Austin and I try to respond to all those and answer the questions when we can. And then also, please share it if you think somebody would be interested in this topic. Or if you listened to a past episode and thought this really would be good for so-and-so, go ahead, share it, and help them out.
Well, thanks, everyone, for listening. Have a good week.
Yep. See you later. Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zuercher Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zuercher Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zuercher Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.